The following financial data are provided. Sales. Sales in November and December 20X3 are forecast to be 75,000 and 70,000 respectively. Sales in January, February, and March 20X4 are forecast to be 65,000, 70K, 75K respectively. Total cash receipts in January, February, and March 20X4 are forecast to be 70.5K, 66.5K, and 69.5K respectively. Expenditures. Purchases represent 60% of sales. 25% of purchases is paid in cash. 55% is paid in the month immediately following the month of purchase, and the remaining 20% is paid 2 months following the month of purchase. Rental payment of 5,000 will be made each month. A fixed salary of 6,000 is paid to administrative staff, and a commission of 10% of sales is paid to salesmen. Tax payment of 4.5K must be made in January 20X4. Office equipment costing 11K was ordered earlier and will be paid for in full amount in February 20X4. Interest payment of 8,000 is due in March 20X4. Cash. Ending cash balance of 31st December 20X3 is forecast to be 2,000. Minimum cash balance at the end of each month in 20X4 is 7,000. The financial manager of a firm is asked in October 20X3 to prepare the following: projected cash disbursement for January, February, and March 20X4 based on the financial data provided. Question. Sales. Point 1. Sales in November and December 20X3 are forecast to be 75K and 70K respectively. Question. Sales. Point 2. Sales in January, February, and March 20X4 are forecast to be 65K, 70K, and 75K respectively. Purchases. Question. Expenditure. Point 1. Purchases represents 60% of sales. In November, 60% times 75K sales gives you 45K. So basically, 60% of the sales are purchases. 60% times 70K gives you 42K. 60% times 65K gives you 39K. 60% times 70K gives you 42K. And 60% times 75K gives you 45K. Refer to expenditures. Point 1. 25% of purchases is paid in cash. So 25% times 45K gives you 11K 250. 25% times 42K gives you 10.5K. 25% times 39K gives you 9750. 25% times 42K gives you 10.5K. 25% times 45K gives you 11,250. Payment of accounts payable lagged 1 month, 55%. Refer to Appendix 1.1. 55% is paid in the month immediately following the month of purchase. So payment is made 1 month after the purchase is made. 55% times 45K gives you 24,750. 55% times 42K gives you 23,100. 55% times 39K gives you 21,450. 55% times 42K gives you 23,100. Lag 2 months, 20%. Refer to expenditure point 1. The remaining 20% is paid 2 months following the month of purchase. It means payment is made 2 months later. 20% times 45K gives you 9K. 20% times 42K gives you 8,400. 20% times 39K gives you 7,800. Please spend a moment to look at this part of the answer. From a question, expenditure point 2, rental payment of 5,000 will be made each month. Rental payment 5,000 per month. From a question, expenditure point 3, a fixed salary of 6,000 is paid to administrative staff. Salaries fixed 6,000 per month. And a commission of 10% is paid to salesmen. Commission 10% of sales, so it's 10% times sales. 10% times 65K equals to 6.5K. 10% times 70K gives you 7K. 10% times 75K gives you 7.5K. From a question, expenditures point 4, the tax payment of 4.5 thousand must be made in January 20X4. Tax payments 4.5 thousand in January. From a question, expenditures point 5, the office equipment costing 11,000 was ordered earlier and will be paid for in full amount in February 20X4. Office equipment payments 11,000 in February. From a question, expenditures point 6, interest payment of 8K is due in March 20X4. Interest payments 8,000 in March. Please spend a moment to look at this part of the answer. Let us find the total cash disbursements in the month of January. Add up all the figures in January and it gives you 65,850. This is the total cash disbursement. In the month of Feb, add up all the figures in Feb. It gives you 69,350. This is the total cash disbursement in February. Refer to the month of March. Add up all these figures. It gives you 68,650. This is the total cash disbursement in March. Please spend a moment to look at this part of the answer. A cash budget for January, February, and March with the X4. Question. Sales point 3. Total cash receipts in January, February, and March 20x4 are forecast to be 70.5 thousand, 66.5 thousand, and 69.5 thousand respectively. Less total cash disbursements. These figures can be copied from your answers in Table 1, from the last row of Table 1. Net cash flow. The formula for net cash flow is total cash receipts minus total cash disbursements equals to net cash flow. In January, 70.5k minus 63.85k gives you 6650. In February, 66.5k minus 69350 gives you 2850, negative 2850. In March, 69.5k minus 68.65k gives you positive 850. At beginning cash balance. Refer to question cash point 1. Ending cash balance on 31st December 20x3 is forecast to be 2,000. So this 2,000 will be brought forward to the next month, will be the beginning cash balance of January. Ending cash balance. The formula for ending cash balance is net cash flow plus beginning cash equals to ending cash. 6650 plus 2000 gives you 8,650. This ending cash balance will be brought forward to next month to be the beginning cash balance for February. Negative 2850 plus 8650 gives you a positive 5800. Same thing, the ending cash balance in February will be the beginning cash balance in March. $850 plus 5,800 gives you a positive 6650. From a question, cash point to minimum cash balance at the end of each month in 20x4 is 7,000. Less minimum cash balance, negative 7,000. The formula for the last row is ending cash balance minus minimum cash balance equals to negative required total financing or positive excess cash balance. The working here is 8650 minus 7k gives you a positive figure of 1650. Positive figure indicates excess cash balance. This shows that ending cash balance is greater than the minimum cash balance. The result in excess cash balance. In February, 5.8k minus 7k gives you a negative 1.2k. Negative value indicates required total financing. It shows that ending cash balance is lesser than the minimum cash balance that result in required total financing. In March, 6650 minus 7k gives you a negative 350, which indicates a negative figure indicates required total financing. Shows that ending cash balance is lesser than the minimum cash balance that result in required total financing. Please spend a moment to look at this part of the answer.